biggest risk is not taking the risk. And, I didn't want to get golden handcuffs later on where you're making so much money.
Okay, another session that's going to be really hot. I'm excited because I've known these guys forever, right? And I've seen the complete cycle from them being, hustlers, right? But really, corporate hustlers, and then deciding to start Squire Technologies. I remember when these guys were in the Valley making the rounds, joining YC, which is, by the way, very impressive at the time in and of itself. And then it went on to grow Squire to a $750 million valuation, which, as we all know, is very, very rare air to be venture backed in general, but to operate at that level. I think more importantly, though, is the cultural impact that we see with Squire. Very rarely do you see people getting out there building something like this that's a clearly tech-driven company, right? So the technology is strong, but also like the impact they're making, the way they represent themselves and the culture as CEO and president is something to aspire to. So with that, I'm just gonna say, Song, Dave, appreciate you all as always joining and sharing the insights and the wisdom for these young, hungry, maybe not so young in cases, but they're hungry, looking to build wealth creation. You're here on a launch pathway, so you're going to tell us about your story building Squire. So thank you guys for joining.
Thank you for having me. I
Thank you.
appreciate you, Brendan.
Yeah, excited to be here.
Most deaf. So I think what always to me is really interesting about this story is how so many of us can identify with where you started and then the risk reward math that you were doing along the way, right? From the perspective of, okay, at a certain point, you all had to leave the job. What did you need to see for that to be something that made sense for you? To a degree, you all met, right, organically as friends and then kind of went through this process together, right? And so I think this idea of finding a co-founder and why this co-founder is a question a lot of us ask, and then lastly, there's the element of how do you test these concepts out before you actually step out there? And you all had an interesting approach and how you did that. But let's kind of start with maybe just let's set the baseline of Song. I'll start with you in terms of what was your kind of professional journey up to the point of Squire becoming a thing?
Yeah, when we started Squire, as you said, Dave and I were friends. I was actually a corporate lawyer. So I was working at a big firm in New York called Skadden Arps, and I was doing M&A. And I had been working at that firm for maybe about 3 years, 2 or 3 years before we started Squire. And, like a lot of big firm associates, I was not really fulfilled by the work. It was long hours and really intense, which wasn't a problem, but it was more so I didn't feel like the work I was doing as a junior level corporate associate really mattered in like the bigger picture of life. It just seemed very monotonous. So after a few years of it, I realized like I'm not going to be the person that's going to be here 10 years and my partner. So what else is out there? What are the other options? And, so Dave and I used to just kind of go back and forth about ideas. And that's what, that led to eventually starting Squire.
Love it. So Dave, and we knew each other socially as well. How did you actually meet Song to begin with? And what was your journey? Where were you in your career at that point before you all started really brewing on this idea?
Yeah, thanks, Brendan. So Song and I met informally, just hanging out in Harlem, in the kind of like 2010-ish, 2009 area, and basically there's a group of Black young professionals that we used to just go out and hang out and have a good time. We had common interests, party on the weekends and just I think it was a great time to meet valuable connections and like-minded people. So that's kind of how we met socially, and going out and having fun on the weekends and really just enjoying Harlem in the early 2010s.
And
Yeah.
what were you doing career-wise at that
So
point?
so I was in finance, working at JPMorgan, Chase, and then actually we started Squire, and during my first year of business school, and yeah, that's kind of what I was doing.
So Song, go ahead. And I wanted to hear why was Dave the one that you really locked in with when it came down to let's do something, right? Because and you know, look, you came from this hot pedigree background. I want you to share about, you know, a little bit about that as well. But you had this ability to see like past what a lot of high, you know, kind of achieving folks, these kind of blinders. I need to do this. I need to present myself in this way to be successful, right? It's almost kind of in some ways like feels like a prison. You were able to kind of break through that. And I feel like Dave always represented, at least to me, someone who was always exploring different ideas and people and relationships. What was it that drew you to Dave and you know and really locking in with him in this idea of kind of exploring entrepreneurship?
Yeah, as Dave mentioned, it grew out of just a genuine friendship where it started off socially. We had a pretty tight knit group of friends. All lived in Harlem. All were making money for the first time in our lives in our early to mid 20s. So it was just a really fun and exciting time. And after a few years though of just a lot of hanging out, getting to know each other, we built some really great relationships. But also we were starting to get to a point where we were asking ourselves like, what more is there to this? Like it just seemed like kind of like this hamster wheel, working during the week, partying on the weekends, getting tables and all that bottles and stuff, and then next you're back Monday, same place again, and it was just like this can't be it. So I think we kind of connected on that point where we both were wanted more, was wondering what more was there to life. Um, and I think that we both have a very entrepreneurial spirit. I went to law school, as I mentioned. I went to Yale for law school, and came out and went directly to the firm. But prior to starting law school, I actually had a company out of college. So I took a year off between undergrad and law school, and I started a tutoring company back then. So and I ran that for a year. So even back then, like there was this entrepreneurial kind of spark, and I think Dave, I connected with Dave on that front because he's very entrepreneurial. You may remember the infamous tequila room uh,
Yeah, Harlem.
in Harlem, which was one of
Yeah,
Dave's first ventures, which I remember, distinctly, and we were all so excited about it, and you could just see that he had it in him to just be somebody who creates things and is able to influence people and just kind of really push things forward. So I think that that's the kind of energy you need to be successful as a founder. You need to be able to just make something out of nothing and just have a sheer will to manifest things in reality from your mind. And so I think we both kind of shared that, and then there was a genuine connection. The best founder relationships, in my opinion, often have a foundation of a real friendship. It's not just pure business. Because when it's pure business, when the times get hard and there's conflict, oftentimes those relationships deteriorate. But if there's like a common friendship and respect there, then you can survive those hard moments. So yeah, that was it. And we started just thinking about ideas and brainstorming, and eventually both committed to let's try to be great instead of
yeah.
just working at these companies.
Yeah, there was, out of our friend group, there's like 9, 10 guys, all about the same age. And, I think, Song went around to a bunch of them and a lot of them, like starting something and they didn't want to participate, like they didn't want to, and then, I guess when, we spoke about it, it was like, yeah, why not? It was one of those things where like, hey, if you don't take the risk now, when are you gonna take the risk? Like, you know, everybody can't be like you, Brandon, and wait 10 years, 15 years and get this nest egg built up. But I think I said like the biggest risk is not taking the risk. And I didn't want to get golden handcuffs later on where you're making so much money. It's just like you're in this spiral where, it costs too much to leave and you have these, responsibilities like, mortgages and stuff like that where you just can't take the risk, because it's just too costly. And I really believe, that, you can't be halfway in it. You have to be all the way in it in order to like really, back against the wall, this is going to work, plan A type thing, because that just, makes you focus on another level where it's like, hey, this is how I have to eat and, this has to work. I think there's a different mentality, that has a sense of urgency that, if you're doing something not part-time, but like, yeah, it could work, it could work, it couldn't work, I'll still be okay. I think that drives a different level of urgency in you to kind of like get it done and just make action happen.
Let's get into that entrepreneurial mindset because Dave, when I think about you, man, I see, take this comparison for what it, for what it's worth. Like a Tupac, right? He had this urgency, right, to move and do things. I remember when I met you, you had a social concept going on. You were early in on the Airbnbs thing before it became a thing. You had your hand in so many different pots. And the other thing was like Tupac was very prolific, right? In a short amount of time, he had like an incredible body of work, right? And so to me, that hustler spirit, you combine that with like this ability to really see out and not really feel like there was nothing that you couldn't do if you weren't grinding towards it. So I would argue back then, I want to hear how long ago you all actually started Squire. Tech was still kind of like earlier stages. I remember I was at Google at this time. We had moved to the Bay before you all did. But it was early, right? It wasn't many people saying, let me get into the game and start a tech company, especially if I didn't have an engineering background. This was something that you locked into and said, we're going all the way, right? And then you got validation, which was you got into YC, et cetera. But it all kind of came back to me around really getting busy, having urgency, seeing something that was out there and saying, I could actually do this. What's your reflections on like how tech and a tech concept specifically became what you thought was the quote unquote hustle, that was gonna, give you that best shot?
Yeah, that's a great question. So those little hustles, the Airbnb, the tequila lounge, all that, that didn't have a exponential return ability, and when you're like thinking about like how can I have, generational wealth and outcomes, I think it's important to focus on things that if this wins, it's going to have an enormous return. And that's kind of was the litmus test is like, hey, look, you could do these little hustle things or you could lock in on something big and lock in for a couple of years and this can have life changing effects. So that's what was really, the question to me is like, hey, this has a potential, this, gets big enough, will it change the legacy of my family? And that's kind of where you want to put your efforts in. It's kind of like the VC models, like bet on something, commit to it. And, if you win, you win. If you lose, you can always go back to, starting something else or pivoting. But, the worst case scenario is you'll learn something that's invaluable about yourself and you'll learn something about, what you're made of.
So Saul, again, we're gonna do the risk calculus right now, right? Dave had a bunch of irons in the fire. You're working M&A at Skadden, putting in some serious hours, right? For you, you had to do some different math in terms of what you were walking away from, in terms of the perception risk. Dave said locking into something big that he felt, was worth the juice was worth the squeeze. But you got to really believe that, right? To step out there, you really got to believe that you can create a tech company that can achieve a $750 million valuation. How were you thinking about this opportunity, at the time where it was this trade-off of, yes, I am young, but at the same time, like, I have to really believe in the potential of this thing.
I looked at it at the time like an asymmetry of risk reward. So meaning that you could pretty much define and cap like what the potential risk would be. Like we try this, we leave the job, it goes to zero. It's a complete failure. What is the actual tangible impacts of life? And the way I looked at it is like, yes, that would be a setback, but it wouldn't be existential. It wouldn't be something that I couldn't recover from. Worst case, I could always get another law firm job, um, or find something else in the corporate world. Conversely, the upside is essentially limitless. Like there's as entrepreneurships to starting a company, and owning capital, there's no limit to how much wealth and how much impact you could have. So from that perspective, it was really actually an easy call, coupled with the fact that I really did not enjoy and wasn't happy at the firm, so that made it even easier. So people always ask, like, how did you make the leap? And it wasn't. It was the easiest leap I ever made in my life at the time because I was just so ready to move on to something else. And fortunately, it worked out. But I didn't know that at the time with certainty, but I believed that the potential was great and that we would eventually be successful. So I never really looked back, never questioned it. It was an easy decision.
Yeah, and there's a I forget who said there's a podcast or something I was listening to the other day, and that describes this situation pretty spot on. But it's with capital when you invest. The worst thing you could do is lose 1x, 1x your money. But if you hit and you go, it's the amount of multiples you can make are amazing or are just almost infinite if you hit the right thing. But you can only lose 1x of what you put in. So if you take that philosophy, and you're confident in yourself, you can only lose like your time, year. How much is that worth? A couple. But if this goes big, it could really be life changing.
Okay, so let's go from, we're talking about the ingredients of becoming a great entrepreneur, and obviously you all have earned those stripes. You will go down regardless of whatever happened from this point on as a great entrepreneur, simply based on what you already accomplished. We know assessing risk, right? Getting into the game is a blocker for a lot of people. You already, you kind of broke down how you got past that stage. But Song, at the end of the day, you have to find the concept, right, that you're going to hang your hat on. And that process is not pretty. Can you give us a little bit of insight into where you started? You and Dave kicking around concepts to honing in on Squire, maybe let's call it V1 Squire, and maybe how that has morphed into the platform today. Give us a little bit around, what Squire does and the needs you were looking to serve.
The process was that we started on the weekends instead of going out during the day, at least. Instead of going to the brunch party, we would sneak into Columbia campus uptown, and we would go into the classrooms and just start whiteboarding ideas. And we did this over several weeks. And we were just trying to think of whatever, like, what are the problems we could solve? What are things that we understand that should exist? And we were very focused on tech, and it being a tech company. And to Dave's earlier point, we wanted something that had potential exponential scale and impact. So that much we knew. But other than that, we didn't really have any priors. It was just trying to start from first principles, blank canvas. What are the things we could do? Through that process, we eventually came to this concept of the barbershop, and it was rooted in our own experience, which I think are the best companies and our own problems of every week we're getting a haircut, going to, different shops, either in Midtown near our office or, in Harlem. And the process was just so inefficient of texting the barber back and forth, having to have cash, get in there and you might wait 10 minutes or you might wait 2 hours, which is, okay when you're like a kid growing up, but when you're, a busy professional, that's just unacceptable. And it didn't make sense that this is like the last area of life at the time that was pretty untouched by technology, and so inefficient. Yet at the same time, was such an important ritual, and pretty much almost all men's lives. Of you go in and you come out feeling like your best self, feeling confident, in a way that you didn't when you first walked in. So it was a pretty magical experience, and at the same time, really antiquated and quite frustrating. So that was when we stumbled on that idea. We were like, okay, we think we have something here. And we started getting excited and started doing more research, talking to barbers, just walking in the shops, talking to people waiting, and trying to get as much data and understanding from the customer of like, is this real? Can we validate this? And we thought it might have been a black barber issue at first only. But then the more we talked to people, different communities, different cultures, we started realizing, wow, this is like a universal experience. This is something that's shared across, different groups. So we could really build something big.
Let's talk about Dave the grind, right? Nowadays they see you and they're like, I don't want to say you made it look easy, but in many people's minds, you all have built the dream, right? Is your co-founder, right? The name Squire is a dope name. You're in barbershops is cool, but it's a tech company. You have this valuation. I could do that, right? It's easy. They did it. But, we know deep down it took a lot, right? It took a lot to get to that point. Can you maybe, Dave, share give us an appreciation for the grind, the tough times earlier on, even now, help us understand how hard this journey really is.
I mean, if it's easy, everybody would do it, right? That's the adult thing. But the thing is, like, early into the grind, a lot of no's, a lot of people not believing, a lot of pigeon boxing, like pigeonholing, us, saying that this is just for black barbers, a lot of difficulty raising cash at first, during our series A. We didn't also like, even though we went through Y Combinator, we didn't get that inflection of cash. It was just like build, lay down the tracks, get some traction, go back with your hand out, try to get some more money. A lot of times we almost ran out of money. We almost ran out of money during our Series A fundraise. Only getting one term sheet after 60 meetings. So it was not something that was easy. But I think not one point did we question giving up. Because we knew that we were building something. We knew that we had product market fit and customers were using our product. And when customers are using your product, telling you that they appreciate what you've done, you've streamlined my operation, you have something. And sometimes it takes, other people to realize, what you're doing. And at the end of the day, you only need one yes, no matter how many no's you get. And I think that is the, defining factor, I would say, is grit and determination. And you hear that a lot, but it's actually true. I mean, people give up right when they're on the precipice, right when they're on the cusp. People often give up, and the ones that, just keep going and fighting through the strife is the ones that actually make it. And luckily, we persevered. But I think if you work hard and you keep on going, you keep focused and you don't get discouraged, and it's easy to get discouraged, when things aren't going right. But if you have, product market fit and customers, I think that's a telltale of you have something there.
So Song, Dave is basically talking about, the perseverance piece, right? And I think, when I think about Squire, maybe there were some pivots in there, but if anything, I think you all just broaden the portfolio, but the core thesis kind of remained true. So I don't know if the pivots we've seen from, Instagram was this before it became that, Twitter was this before, that didn't really happen in your situation. And so my question for you is it really the perseverance piece, or are there times where people should kind of see the writing on the walls, hear the feedback and say, you know what, maybe this isn't the right concept? Like how should people think about keep going, keep going, keep going as a philosophy versus like trying to really understand and pivot or even stop? Is that, help us understand how to think about that.
Yeah, there's an element of perseverance and grit that is a necessity, because even if you have the best idea, the best product, team, everything in your favor, like you're going to get kicked in the teeth at some point. You're going like it's inevitable. Even the most successful entrepreneurs will tell you that. So you got to be able to take a punch and get back up and just kind of be determined to keep pressing forward. Um, but I think that you need to be flexible and open to pivoting, because there's some people that stay locked in on an idea and it's clearly not working, and they just are keep pressing forward. But I think what that needs to be based on is ultimately the customers. A lot of times entrepreneurs, and we've I've made this mistake at times in the past. You become really like fixated on an idea, but that idea or that product or feature, whatever you're working on, is really in furtherance of like your own interest, and you're not putting your customer first. And a lot of the biggest mistakes we've made, that's been the case. We've never made a mistake by putting the customer first. So if the data that if you keep trying for something to market and the customers are rejecting it or not paying for it or they're churning, then that means you need to change, because the market and the customer is telling you that what you're producing ain't working. But if you are getting that signal from the customers that they actually love this product, they'll pay for it, then you just keep going no matter what, because you're getting that positive feedback from what ultimately matters. And I think you'll never go wrong by caring too much about your customers and providing too much of a great experience. So it's kind of you have to have a balance of that sheer just determination and also flexibility and ability to change through the lens of what are you hearing from your customers.
Got it. That makes a lot of sense. Dave, let's talk about milestones, right? And obviously hindsight is 2020, but Saran just brought this idea of customers, right? And when you're going in the right direction when a customer has really leaned in. So let's talk about when you reflect back these milestones that you knew like we're really on to something, right? And so maybe it's a customer that you won over, maybe it's getting into YC, maybe it's some other milestone. But when you kind of reflect back on like some of the key moments that you knew you all were on to something, what were some of those moments that come to mind for you?
I mean, I think YC was one of them, an inflection point where we got into YC. But before that, it's like when people were giving you the opportunity to run their whole business operations on a platform that was improved. And you've seen it work. You see people booking, you see people coming in and using your system and also being appreciative of what you built, even though it was janky, even though like some of the V1s of our product was so bad. I don't know how these organizations trust us with their business, but they did. And that told me and told Song that, we're working on something special. If an organization and critically, like a critical component of their organization, a small business is the money and then money movement. And if they trusting you with their livelihood, that means with a product that was not good, not good to say the least, then you're working on something, and you just have to iterate to make it better. So I think that was the first kind of like sign of something like product market fit, is because people would go through the pain of using a product and still use it. And we saw the transactions going up every month. We saw the people willing to take chances. I don't know why they were willing to take chances, but ultimately they did. And I think that was the first indicator that we were working on something that had some legs.
Got it.
Thanks, because if you're solving a problem that's a real problem for a customer and it's something that's a pain that they're feeling viscerally and you're attempting to solve it, they will be very forgiving if it doesn't work 100% because they can see what you're trying to do. Versus if you're solving something they don't care about or that is like a vitamin, not a painkiller to them, then they're going to be much less forgiving because if it works, it's not even going to be that impactful anyway. And even though our product wasn't that great, especially relative to now, they could see that what we were building was we were the only ones doing it, and we were really trying to do something that would add a lot of value to them. So I think that's why they were willing to work with us.
I remember back in the day when you all were NYC, and I think we got to talk about this part. You both are accomplished professionals, both on the court, off the court, but you were not engineers, right? And you're building a tech product, so in a lot of ways you were dependent on somebody else to come in and be the technical builder for you. We could go a lot of ways with this conversation. It could be how do you recruit people, right? It could be how do you identify the right talent. But I think at the end of the day, when you take, when you're in these situations, really it's your ability to sell, right? Sell a vision, and sales really at the core. So Dave, help us understand how a non-technical person can successfully build, first of all, getting a Y Combinator, which is known for you need to have an engineer, right? You have two co-founders who are not engineers. What was the story there? How did you think about this evolution on the technical side to find somebody to build what you were looking for? And ultimately, I think sales is a big part of it, but how are you able to continue to recruit people and stick around long enough to even iterate through that process of finding the right, builder for you all?
Yeah, I think we were lucky and fortunate to find, a technical person, after, there's another story on top of that, but we were lucky to find a technical person who actually became the CTO. And we were able to convince this person to build this V1 of the application that was just good enough to get into YC. We needed, because Michael Siebel back there was like technical, 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 technical. We applied to Y Combinator 3 times. On the third time, we got into the fellowship program, and then we actually were able to get into the YC core problem, core. So we applied a bunch of times, but the first time we didn't have a technical co-founder. Second time, that person just started. And third time we had somewhat of a product that was built. So, we got lucky. We were able to, convince this person to join the team as CTO. And that was enough to get us over the hump.
Yeah, to your point about selling, at that time, this was before, AI, obviously what we have now, but at that time, if you were not building product or an engineer, you are selling. There's only two things that a startup needs. It's the building a product and selling and getting customers. So if you weren't technical, you needed to be able to sell. And the first person you had to sell was the technical co-founder. Like there's just really no way around it. The only solo founders at the time really were technical. So like it could be one person that could build but it couldn't go the other way around. Like there's really no way to build a tech company. You could outsource it, but that almost never works. It just ended up spending a lot of money and getting, poor product in return. Now, fortunately, this is a super exciting time to be a builder, because these AI tools are just incredibly powerful. And in my opinion, the line between technical and non-technical is going to be very blurred. And in other words, not being technical is no longer an excuse. Like go figure it out. Like you should be able to figure it out and code, vibe code your way to a functional prototype and or an MVP. I think anyone should be able to do that at this point, given the tools. And I know because I use them. Or, like you have to be in it. So I think that's really, really exciting and dope time for founders. But back then, 10 years ago, there was no way around it. Yeah, we had to get a CTO.
This is actually a good segue into, this conversation around raising venture capital, right? In many cases, it's hard to do in general, right? So even if you wanted to do it, it's definitely not promised that you're going to be able to, become a venture-backed company. But you all went through this process, right? Which is something else you can speak to with insight. Let us know what type of person or company or concept is best aligned with the VC model, and what are the pros and cons on both sides, right? And maybe, you mentioned this song a little bit. How has your thinking evolved now with the power of AI tools to build these MVPs, et cetera? So you were a little bit of a different era, but some things are going to hold true regardless, right? And then some things might have changed. What's your perspective on that? And I'll come to you first, and then we'll go to Dave.
Yeah, I think the venture model hasn't really changed. I mean, it's changed, but not fundamentally. Whereas that they are looking for home runs. So they'll place 100 bets and they only expect, one or a handful to really pay off and return the fund. So as a founder, you have to understand that and ask yourself, like, is this a company that I'm building that could reach that level of scale to give the kind of returns that would be exciting to venture investors? At the time, the goalposts have been moved a little bit, but at the time, it's safe to say, like, if you have a pathway telling a story of like how this could be $100 million, revenue business, like that's usually pretty exciting, because that means that this is probably a billion plus, valuation, opportunity. And the earlier the investors get in, the less big the company has to be for them to get a good return. Meaning that if they invest super early, like pre-seed, angel, and you build $100 million or $200 million company, like that could still be a very good return for them. But if you're raising, Series A, Series B, and later, then the goalpost moves, and you got to tell an even bigger story. And that is something that early on we struggled with, because we would constantly get pushback about our addressable market. How big is it? And there's not a lot of reliable data that exists. So these investors would go Google how many barbers in the U.S. And because it's not like the data, there'd be ridiculous, sites that would say like there's 6,000 barbershops in the U.S. And then they would come back to us and say, well, there's only 6,000 barbershops. How big could this be? And I'm like, dude, there's 6,000 barbershops in Queens. Like, like there's no way that's the whole U.S. number. So we had to get good at getting ahead of their. You guys hearing feedback, or is that just me?
No, you're good.
No? Okay.
I had some feedback.
Yeah, I'm hearing like just started.
I hear you fine, but
Okay.
like that echo cancellation on the side, but keep going.
All right. So where was I? I was talking about the V.
Yeah, you said 6,000
Oh,
barbers in Queens.
yeah. So we would like just just 6,000 barbershops in Queens. So obviously that's not accurate. So we had to get better at responding, predicting what their pushbacks were going to be, and then having a story for it. And over time, we learned more about the business, about the industry, about our own kind of revenue model. And we started being able to paint a story of like, okay, this is how many shops there actually is. Here's a bottom-up tab analysis. Here's a top-down, and here's how much revenue we make per barbershop, and here's how it grows over time. So then you can put all the pieces in place to tell a story that's believable about, okay, I can see how they can scale to these numbers. But in the early days, you don't know that. Like you're really just putting your finger in the wind. And that's okay, particularly in the Valley. The ethos and the culture of the Valley is dream big, go big, you know, talk about how you're going to get to, 100 million, 200 million, build a $10 billion company. You have to have that kind of vision, even if it feels uncomfortable. And that's something we had to learn. And I think a lot of times, people from, our communities, black communities, like we want to be very, when we start companies, like very practical. We want to like tell a number that we are very confident in, that's reasonable, that we can, and that is a bit limiting when it comes to VC, backed companies and like just, winning in tech in the Silicon Valley. Like, don't limit yourself. Think what's the biggest possible version of this, and like, is it even possible within the laws of physics? Could this happen? Yes. Okay. Like, go for it then. Like that's how you have to think. And you may not hit it, but if you're gonna get a lot further than you would have. So that's one thing, that we've learned.
Dave, same question framed differently, which is, Dave, the hustle king, is starting right now. How would you approach the game?
I mean, yeah, that's a great question. So I just want to say something, the song brought up, about the market size and how lazy VCs are sometimes. They're going to have confirmation bias any which way, and when you approaching them, you can tell, you should be able to pick up whether they like the idea or they don't like the idea. Because what often happens is when they like the idea, they're going to look for data points that support it. And when they don't like the idea, they're going to look for points that don't support it. And we should pick up really easy. Like, it just didn't make any sense. Oh, they just did Google search. You're being lazy, like you're not having any mental exercise, because there's no way 6,000 barbershops can support, 300 million people. So like that stuff happened a lot early on. But to your question, if I was, starting a company right now, I would do things that are, I would try to focus on things that are central that to life and health and stuff like that. I feel like with AI, a lot of things can be done really quickly. You can iterate really fast, and you can get your product in the hands of customers really quickly. And once you do that, you can validate ideas, and you can see if there's product market fit or there's interest. I think, I like small businesses. I think they're the backbone of the American economy. And, they are very easy to approach and talk to. And, the barriers to entry to have a conversation aren't that hard. When you go, maybe upstream to, more enterprises, that's a little more difficult. They're entrenched and in their, processes. So, I think, and oftentimes, people from, our backgrounds who don't have the technical expertise, it doesn't make sense to build the enterprise product tool if you're not from that industry and you don't have the relationships, because the barrier to entry and getting in there is going to be difficult, and getting those to advocate those early evangelists is a challenge. So I would think about businesses that are close, that you have some sort of expertise or unfair advantage in, and think about and see those inefficiencies and kind of build something to that notion.
Song, scaling, right? So how long has Squire been around now, total years?
11.
First of all, congratulations, audience. Give the virtual round of applause. Because again, people talk about survivorship bias, but you all made it 11 years. That is not a small thing by any means. But during those 11 years, you went into, okay, now we are growing our team. Now we're dealing with competition, right? That's a thing. We hit the pandemic. We're now dividing our roles differently. We're bringing in, we're hiring and maybe making some mistakes. So, tell us a little bit around that journey of scaling, because it's like a Zuckerberg situation. Like, yeah, it started off Harvard only. Somehow along the way, he's been able to move and shake and bob and weave to run a completely different company, right? And so you have to grow along the way. What have you learned in scaling Squire that we can kind of to pick up some wisdom from?
Yeah, you're absolutely right there. When you start a company from inception, from idea, literally an idea, all the way going through, the journey of the company maturing, and then, scaling and getting to kind of where we are now. so much changes about the company itself, the number of customers you're interacting with, the product, the employees that you need to bring on at any given time. And a lot of people who are part of the company in the early days, eventually the company will kind of outgrow them. And that's okay. That's a natural part of the process. And then you have to find new people who are, have what it takes to get the company to the next level. And as founders, if you want to kind of be in it throughout that entire journey and still adding value and making the company successful, then I think you have to be a learning machine. Like you have to, growing and learning is kind of like your core job, because every 6 months or so, the ground shifts beneath you, and the skills that are required changes, and the way you talk about the company changes, and the narrative changes, and the way you communicate in some ways has to change. And there's no way to do that successfully, based on what I've learned thus far, without being very, very adaptable, and evolving with the company as it grows. And just to give some more concrete examples, like when you first start, first year or two, you're trying to find product market fit. A company should not have a lot of bureaucracy and process at that time. That's why it's a mistake to hire big company people for early stage companies, because they don't know how to move and navigate in an early stage environment. You need to be able to just, throw things at the wall, see what sticks. Everybody's doing everything. You're focusing on customers, you're selling, you're doing customer support. You have to be able to be a generalist, a super generalist. And then, as the company starts growing, and then eventually you'll hit a point where that stops working. And now you actually need process. And now you need to bring in people who have done it before, who have built teams. And the only way to be able to do both is you have to be adaptable, because most people are either early stage people, mid stage people, growth stage, public IPO type companies. They work at companies like that. Very few people can navigate in all the above. And I think that's what, you mentioned, like Zuck and like a lot of these guys, like that's what the great founders are able to do. They're founder-led companies, and they've been able to grow with the companies all through the journey and are still operating at a really high level, excelling. So that's what, that's what I aspire to do. I think we've been doing a good job, so far to getting where we are. Still so much room to grow and so much learning to do. But it never stops. Never stops.
Dave, same question, right? We hear like, 9 out of 10, startups are going to fail, right? You all are in year 11. Again, tip in the hat to that. What are the lessons you learned from scaling? And another way to put it would be, what would you, from your lessons learned, advise other folks so that they're not in that 9 out of 10, that aren't going to make it?
What I would advise other people is, like, as Songe said, be adaptable. As time goes on, like you learn a lot. You learn a lot about yourself. You learn a lot about the organization. You learn a lot about the people. You learn about what you're good at and what you're not good at. And I think a lot of folks try to be good at everything, but you're not going to be the best finance person. You're not going to be the best marketing. And when to bring those people in is critical. And also, delegating responsibility and giving people autonomy, I think, is also a good skill to create, especially later on. Early on, I think, in order to succeed, you have to be, willing to do anything and everything. When you're early, you have to be willing to, you have to be willing to go into a barber store and run the front desk. You just have to do it, and I think having a philosophy of nothing is beneath you. It's a meaning like if shit comes, I'm sorry,
Okay.
if stuff hits the fan, you will be willing to, do whatever it takes to get this done. I think CEO NVIDIA always says this, as part of his thing. He said, "Hey, I waited tables. I did this, so I know where my low point is. I know what I'm willing to do in order to succeed." And I think that has to be the philosophy, that you'll do anything in order for this to achieve success, even if it's going to do the bare minimum of what needs to get done. But that's not what you ultimately are responsible for. And ultimately, but it's the mindset. It's the mindset of like, hey, I'm willing to do this if necessary. and then also that ethos radiates throughout the organization. You know, if you can say like, listen, I'm willing to the customer success person, I'm willing to do your job if I need to and I have to, I think changes the culture of the organization. And I think, yeah, that's not scalable, but it's actually the mindset and what kind of like transcends companies.
But basically is the inner battle becoming the best version of yourself, and then that sets the culture from the top to you create an organization that will ultimately see your example, live by your example. And so if you're not doing it, you're not setting up a culture for success. That's a lot of wisdom. Song, let's switch gears a little bit, man. You all now, you hear 750 million. That means you, in a lot of ways, unlocked a new level of, let's call it, security for your family and future generations. Talk to us about how that changed your outlook, right? People are looking at, a lot of the reasons people want to do it, whether it's the right reason or the wrong reason, is they want that opportunity to create a new, circumstance for their future generations. When you got to whatever moment that was where you're like, I mean, I've hit that milestone, right? One of the many milestones, but a major one. How did that change how you thought? What were you exposed to now that you can maybe share with other people around the challenges, the opportunities that you see now that you're kind of at a different level of the game?
Yeah, I think that it's a reflection of, yes, we all want to get paid. Everybody wants to, be wealthy, 100%. From a founder perspective, like creating a company, it's reflection like the value you create for customers. If you create enough value for customers, get investors bought in on that, then you in turn can like the wealth that you're gonna get is just a small percentage of hopefully the value that you're creating, for your customers and for the world, for all the shareholders. But yeah, we were fortunate, and when I look back on it now, it was actually a relatively short period of time, even though it didn't feel like it in the moment. But we've been running the company for so long now. Then when I look back, so we started 2015, launched 2016. By 2019, we had raised a Series B end of 2019 and took our first secondary. So really, you're talking about 3.5 years, and in that secondary is when you raise money, and then I know but just for the audience, then you sell some of your shares as part of that transaction, and you actually take some liquidity. So within 3.5 years, we were liquid millionaires, which is kind of wild. I mean, that just shows the potential of being an entrepreneur and taking a bet on yourself, because to be a million liquid, like I know people who worked at law firms and made partner and still weren't liquid $1 million because their expenses are so high. So that was pretty incredible, and that fundamentally changed. I'll stick to my life. Never growing up with wealth. Being the wealthiest person in my family just from having worked at a law firm, not from actually having substantial wealth until that point. And then it definitely changes you in a lot of ways, and in some ways I think it can make you a better founder, because that's not enough money for you to just be like, go retire on, but it's enough to give you the confidence and the stability to dream even going bigger, because now you've got a taste of it, your family's comfortable, you're not stressed about finances, paying bills, mortgages, etc., and you can be really locked in on growing the company. And also makes you go bigger, because if selling a company for a smaller amount, once you're already, a millionaire liquid, selling a company for, let's just say, 200 million and making another 10, 20 million, like that actually is not that meaningful to you. Now you're like, all right, I'll put in the time to go even bigger. Like now, like we're focused, like this is going to be $1 billion exit come hell or high water, because like otherwise my life's not going to change that much, right? So that's another kind of positive of it. But I really always recommend founders, if you're fortunate enough to get to the opportunity to take secondary in your journey, 100% take it, because you don't know what the future holds. We took that secondary in December 19. We didn't know what was around the corner, and it allowed us to go into that period, of COVID, much more stable, much more stability, much less stressed than we would have been had we not, taken it. So, yeah, that's my 2 cents on that.
That's big, and it shows you never know what's around the corner. To your point, that security is super important. Dave, it's like the ring, Lord of the Rings. That liquidity, You can either lock in and get more focused, or you can get really distracted. What was your experience kind of achieving that?
I think liquidity wasn't that much. So it doesn't really, move near for me. I think focus on, getting this, to multi-billion dollar exit. That's when the real magic happens. And I think
I respectfully push back a little bit. $1 million was a lot of money for us at the time, bro. It wasn't that much. You see how rich this guy is now?
no.
It wasn't that much.
It's also like, look, get out of my pockets, basically. I get
no, but I think focusing on the like North Star of like, hey, like what provides like generational wealth. And that's just not, and that's us to get to, exit. And that's kind of what we're focused on, like how do we build enough value, where, this company, is 200 million revenue or whatever the case may be, where we can, have a meaningful, exit and make all our stakeholders and our employees, really, really wealthy. And that's kind of, where we're at, because not everybody's a founder. Not everybody's going to start a company, but, if you join the early stage company, and take the risk, you should participate in the financial outcome of when, it gets to, sale or something like that. There's plenty of people who made a lot of money by joining these companies early and getting equity in the company. And that's another pathway to wealth, where you don't have to take on the necessary risks, but you still get upside on the back end. So, I think that's the goal, is to, get to, a transaction, whether that's public, whether that's, selling, who knows what the future holds, but that's the goal, is to, have some type of exit to kind of complete the story.
right to make the cipher complete. Now, one last question for both you guys, because I know you got to get back to running this business. Dave, there's multiple types of currency, right? There's the currency we just talked about, but then there's relationship currency. Your level of, moving the needle and hitting these milestones have now put you in, different kinds of rooms. What has been your experience in terms of being in some of these rooms, right? Now that you have been invited in, maybe as a YC founder, and then later as someone, who raised a Series A and then a Series B. Tell us what your lessons are in terms of people that might struggle with, I'm in this new room, I don't necessarily feel like I belong, and maybe start to second guess their confidence, or a sense of I should be in this room, and what they might miss out on if they don't realize, what you've realized.
I think the moral story is just be yourself. Like a lot of people say that, but that's the truth. You're in the room because you were yourself. And if you try to, code switch or switch out, then it's inauthentic. And the people at that level see it inauthentic. They realize inauthentic people really quickly. So I would say just be yourself. You got in that room being yourself, and don't switch it up, because, people see right through that. And when you come across as not being genuine, I think that's a bigger red flag than if you don't know something, or if you're uncomfortable. But people, I think, appreciate when other people be themselves, be their genuine self. And I think, no matter where I've gone, I think that's the same Dave you're going to get from Brooklyn, the same Dave you're going to get now. And I think that resonates well. It might burn some people, rub some people the wrong way, but if it rubs some people the wrong way, those are not the people for you anyway.
So on last one before we close out, a lot of folks here are watching, they're very inspired, right? You're now on the other side. You're still building, you're still growing. You got big plans, big visions, and got a lot of room to see those things, manifest themselves. But, it comes down to kind of this philosophy at the end of the day, where we have to push ourselves to take some type of calculated risk so that we untether our time from our money, right? And so whether someone is looking to be a founder, or maybe there's another avenue that might be better suited for them based on their risk tolerance, what have you learned kind of looking back now, and just the general philosophy around wealth, around kind of why people should be thinking beyond just their current ability to pay bills, and really think about, generations to come, and even, to the extent possible, how you feel the landscape may be shifting, where this conversation is maybe a little bit more urgent than it was, or it felt like, 5-10 years ago.
I think that we're living in one of the greatest moments of civilizational transformation and wealth creation ever in human history. There's been, several of these moments. This is probably the biggest one. And I think that the fact that all of your audience and us included, that we're alive during this time in the game, have the ability to be in it, whether working at a company, starting a company, is just so fortunate. We could have all been born 100 years ago, or even worse, 200 years ago. So I just kind of try to keep that perspective. And I think that there's going to be so much wealth created, and everyone on this call hopefully will be able to think about ways that they can be part of it and attach themselves to it. And ultimately, to your earlier point in the beginning of the conversation, it is going to be related to ownership of capital. That's what it's going to take. And people need to think about, based on what they know, based on their skills, based on their experience thus far and their abilities, how can they best be a part of this, and make sure that they find some way. I would venture to say that most of the folks probably, in the audience have already beaten the odds to get where they are at this point. The odds were kind of against all of us in this country. So if you've beaten the odds before, have confidence in yourself that you can continue to do it. That's something that, we say a lot, at Squire, like we've been beating the odds since inception. And that's why, we're so confident that we're going to continue to, and we're going to be able to have a really big, amazing outcome. So this is the time to do it. This is the time to take the risk. The bigger risk is not doing it. And this is really an exciting time because there's just so much change. There's a lot of uncertainty though. You got to be comfortable with it. No one knows what's going to happen a week from now, let alone a year from now. But you got to embrace that uncertainty and really, make sure that you're in this game right now, because it's an exciting time to be a player, in this game.
For sure. Dave, final words from you before we end this thing.
Yeah, I mean, I think if you're on the fence, lean forward. And that's kind of what I'm saying. Like, the biggest risk is not taking a risk. And if you want to start something, you've been waiting to start something, the time is now. There's no better moment than the present moment. And sometimes it takes you just taking a leap of faith and doing what you have to do.
All right. These are coming from guys who taking that risk, taking that leap, showing you it's possible, doing it in an authentic way. Again, brothers, I know you got a lot going on. A lot of gratitude for you taking the time to share some of this wisdom with the next generation of founders. Go support Squire. Advocate for these guys to achieve that next level of success, because these are the type of guys that will come back, give back, and create something that's going to continue to inspire. So with that, audience, give Songe and Dave a virtual round of applause for joining the Owner Mode Summit. Appreciate you guys. We'll talk to you soon. Take care.